with TradersHelpDesk.com, and I wanted to share with you a video that I did this morning on trading the Bank of Canada rate announcement. Now, the binary options are excellent for trading these market reports because if you have a bias to which direction the market will go during these market reports, then you simply use an out-of-the-money binary option to enter the trade using a very low risk, high reward method. And you'll see in this video, this was a trade I got for $14 a contract, actually made around, I believe it was $63 a contract. Really nice trade because the market did move in my direction. Now, if it didn't move in my direction, well, I would have only lost $14 a contract. So again, this is a very low risk to high reward methodology using divergence to identify which way the market is likely to move during these high volatility reports. Okay guys, I'm in the USD CAD rate announcement. I've been anticipating this to go down all morning. So far it's doing what I want. You can see there's only 59 minutes left in this particular binary. You can also see I was only risking $14 a contract. I do think it would go down, and so far it's doing that. Now, as to why I think it would go down, well, it's a couple of different reasons. One here on the 60-minute chart. Let me get it back. And I'm just going to pin this here real quick. This magenta dot here actually tells me there is divergence. You can also see that the sellers came in on that bar, and they came in really strong on the next few bars. So my question is, okay, why were they selling this particular market right before the rate announcement? That's number one, okay? Number two, if you look at the cumulative delta chart, it gets even better because you can see that they tried to buy it, okay? But here, they went higher in the cumulative delta, but they went lower in price, okay? So again, this would be hidden divergence on the cumulative delta. I mean, there's nowhere to go but down when you see these types of patterns forming. Now, again, I do like to go down to a 5-minute chart. So I'm going to get my 5-minute chart up and we'll see where we come out at. I mean, this is a nice profit with a very, very low risk entry point. And as you can see, they are really pushing it down. They're coming in strong on the 5-minute chart. Again, these are all indications that this market would continue down. Now, again, there was only $14 of risk on this. And you can see it's going down now. The last rate hike, it actually moved, I think it was 162 pips. I wrote about it this morning on the Nadex Market News website. And I mean, these hidden divergence patterns, whether it's in the stochastics or whether it's in the cumulative delta or whether it is in the directional volume indicator, these are extremely powerful moves. They're called momentum moves. And man, when you can get these low risk trades on the binary option side, it's amazing what you can do with it. Now, again, I will be teaching cumulative delta in the Nadex webinar room next week. All you have to do is go to nadex.com, click on webinars, and actually sign up for a webinar. If you do not know what hidden divergence is, all you need to do is watch one of the first videos I posted here that shows what hidden divergence is. In this case, I think I'm going to actually set Now I'm going to go ahead and exit. It's at 15, and that's good. I'm happy with what I made on this. You can see the order has not been filled yet. It's sitting there at $15. The current market is at 21. Now it's at 17. Now it's at 16. Have a little patience. It should be filled. And again, this was a very quick and easy trade. I entered 4 minutes before the market report came out. And right now it's 10:06, so basically I've been in this trade for about 10 minutes. It's about $3 from my profit target. You can see you're getting that volume divergence again on the lows on the 5-minute chart. Very similar to what you saw a few minutes ago. And this is where I'm going to change this working order. I'm actually going to amend it and just say, hey, go ahead and take me out, because the volume is showing me that more likely than not it's actually going to go up. Well, I don't want to stay in the market if it's going to go up. Again, it goes back to the other video I did on your job as a trader. It is to take profits, okay? You can also see, now that I'm out of the trade, I can actually talk. Here, again, this is showing you that price went higher, but the stochastics went lower, okay? Again, this is what's called trend divergence, okay, using the stochastics and price. But the biggest move, the biggest indication was actually the fact that you were making lower highs on the price, but you're making higher highs in the cumulative delta. This is an indication that the market's going to go down. You can also see right here within the volume indicator, buyers really did try to take this market up. They were not successful in doing it. Over here on the 60-minute chart, you had the trend divergence, again indicating that this market was going to go down. Then, as that high was made, you also see that the sellers stepped in and they took control. Very reminiscent of what I showed you on the USD JPY earlier today. When this happens, when sellers sell the high, typically what's going to happen is the market is going to go down. You can also see, in addition to the trend divergence that was on the stochastics, and there's your trend divergence, you're making higher highs in price, lower highs on the stochastics. If you were looking at the volume indicator, you can also see that the buying volume was going down. Now notice on the volume indicator you have a zero line, which is this faint gray line right here. Anything that is above the zero line would be buyers. Anything that is below the zero line is representative of sellers. And this is what makes the volume indicator so unique, because you can actually see, okay, the buyers versus the sellers on every single bar, okay? And I think you need that if you're analyzing volume. Just having one volume bar that doesn't tell me how many buyers or how many sellers doesn't give me a lot of information. But with this, I can say, okay, how many buyers were in this bar versus how many sellers were in this bar, because there's always a constant struggle between buyers and sellers, okay? So it's analyzing who won that struggle, okay? Are they putting a lot of effort into it with no reward? Are they getting rewarded? Are they losing interest? All of this has a huge impact when you're trading. It's telling you whether to enter the trade or whether to take profits. And I mean, really, your job, again, as a trader, is to limit your risk and to take profits. In this particular case, just to recap, we were risking $14 on a trade per contract, and we were able to get out of that trade with a profit of $63. That means our risk to reward ratio on this trade was for every $1 of risk, we were able to make $4.50 in reward. Of course, even if we had lost, we'd lost $14 a contract. That's not a huge amount when, let's say that you were in the spot Forex market and let's say that you were long, you would have had a major loss because there was a potential for that price bar to actually jump over your stop, meaning it never touched it and you were still in the trade. There have been instances of that happening. And, with binary options, you don't have to worry about it. You paid it on entry. I could not have lost more than $14 a contract on this trade. That meant even if it went against me, my maximum exposure was $140 for trading 10 contracts. In this case, I actually did make money, but again, I could have lost just as easily. Sometimes they surprise you and they go in the opposite direction. You can see right now on this 5-minute chart. I mean, they're buying the low right here. They're buying it, okay? So that means it has a potential to go up. Remember, there was another 50 minutes left in that trade. I didn't want that exposure. I had captured most of the profit. I captured all but $23 of the profit. What am I going to stay in this for and let it go against me? As quick as it went in my direction, it could actually go against me. Now, I presume right now this is actually profit taking because there were a lot of traders in this bar. They made nice money, so now they're going to exit their trade. I don't want to stay in for that, okay? So just really focus in on your risk, focus in on your technical analysis indicators. Hopefully you're using a leading indicator like I do, and make sure that when the market is offering you profits, that you're taking those profits, because that's the name of the game. If you're not taking profits, you're not doing your job as a trader, okay?